Tariffs continue on. The US just got hit with a credit downgrade, and retail giants like Walmart and Home Depot are slashing their forecasts. And yet the market is still shrugging it off, and we're getting within 3 or 4% of all-time highs. This is exactly how crashes start. Not with panic, but with complacency. In fact, if you go look at history, the biggest up days are during bear markets or during crashes. In this video, I'm going to show you all the warning signs that are flashing red as we speak, and exactly how I'm preparing before the crowd wakes up, because that's when the real money is made. Okay, US debt levels caused Moody's to finally downgrade. They're the third one to downgrade. The first downgrade was in 2011. There was one in 15 or 16. They're the last ones to take us away from AAA rating. Now, guys, was this the right move? I don't know. We've talked about this many times on the channel. Our debt levels and our deficits have gotten completely out of control. And yes, they might be manageable now, but you see where our interest payments are going. They're going up. When interest rates are 0%, who cares? Let's just borrow it 1 to 2%. We're good. When interest rates jump up and all of a sudden interest payments are now currently, guys, $1.2 trillion per year. $1.2 trillion per year and growing. And if we keep doing these deficits, if we keep adding this debt, there will eventually be a point where it doesn't make sense for the US to be the safe haven that we've gotten used to. Let's not assign that it's forever safe because the past was safe. You have to remember, the great analogy I always use, if you pay your mortgage with your credit card, you can keep doing it as long as the credit card company keeps giving you credit cards, keeps expanding your credit limit. But eventually they'll stop, and they're going to stop based on your income and your assets. Well, guys, if we're going to grow our GDP, which is essentially our income, by 4 or 5 nominal percent per year, not real percentage, nominal percentage, then if we grow our debt by a higher amount than that, it's just a matter of time before our debt becomes insurmountable. And when that happens, and we get downgraded further, what happens to our interest rates? They go up even higher, because now people are taking on more risks to own that debt. And we have to pay a higher interest rate, so it compounds on itself. Higher debt, higher interest rate, higher interest payments. And it becomes a vicious cycle. And we have to keep on printing over and over. Is that catastrophic? Yes. Is that imminent? I have no idea. No one has a clue. But we do know that if we continue on this path forever, it will be difficult to overcome that. If you smoke a pack of cigarettes a day, you're probably not going to get sick anytime soon. But eventually, there'll be a point when you probably get sick and it's life-threatening. Is that a guarantee? Of course not. We could get out of this. If GDP just grows and grows and grows at a faster rate than our deficits, eventually we'll get out of that. Just like clipping away the other way and increasing our debt, if you clip away on the other side, you will be fine. Now, everybody's questioning this US dollar reserve currency status. Guys, everybody's so afraid in this world and in this country of us losing reserve currency status, us not being the biggest and best economy, yada, yada, yada. Remember, a successful world is a successful US. Great Britain is still a great country economically, but they were the #1 country before we were. Does that mean they went down the tubes? Of course not. We can't sit there and let ourselves just be so excited to be the #1 country in the world and say we're always going to be that just because we yell at loudest. I'm an immigrant. We are so pro-US, it's disgusting. But at the end of the day, I'm also, I think, smart enough to realize that, guys, there's a lot of poor countries out there. As they get better, so will we. The pie will get bigger and bigger, and our percentage of that pie will be smaller, but our piece of the pie will be bigger. Think about that. If the pie doubles in size, but we get bigger along with it, we might not fall in half as a percentage, but we'll still be a bigger percentage than the half amount, and that's okay. That's a good thing for everybody in this country and everybody in the world. You look at the early 1800s. It was something like 90% of the world lived under immense poverty. Now it's like 10% of the world. And some dollar, I don't know what the exact dollar amount is, but that's proof that the world getting wealthier and wealthier is good for everyone. Let's not worry about that. There's a lot of tensions right now with China and Iran and other parts of the Middle East, and that affects investor confidence. It's short term. Guys, you know how many things we've had in the last 50, 60, 70, 80 years that have been geopolitical, massive, worldwide economic issues? And how do? We get better. But you know what the funny part is? The one area in the world that people don't care about when it comes to the markets is the one that actually affects the market long run. And that's valuations. And our 2, 3, 4 most reliable metrics and valuations show that we're over 100% or pretty close to 100% overvalued. I will show you those in a minute. But guys, we keep talking about tariffs. We keep talking about these trade wars and how they disrupt global markets. They do, temporarily. Is that going to happen forever? No. We've had tariffs in the past. We've had global trade wars in the past. We get through them. Now, President Trump suggests that companies shouldn't raise their prices and eat the tariffs. Oh my God, is that the stupidest thing I've heard in my entire life? He thinks the market's going to skyrocket while companies absorb these costs, these tariffs, therefore decreasing these profits and making an already overpriced market even more overpriced. Come on. That's ridiculous. Guys, a lot of these things we're talking about here are all temporary. The biggest one that isn't temporary is the debt we have, the deficits we have. When we look at these deficits and this debt and we see people ignoring them, and we have these valuations and I see people ignoring them, I don't understand this. That we ignore the most obvious and the most reliable ones, and we focus on these short-term problems that are so scary, but really in the end of the day, they're not scary. Walmart and Home Depot, 2 of our nation's biggest retailers, because of these tariffs, have really altered their forecasts. Again, is it accurate? Well, these tariffs come through. I mean, look, they already made 90-day exception on tariffs between China and the US. Who knows what happens from there? It is just absolutely mind-boggling to me. We have volatility in the healthcare sector. United Health stock has crashed over 50% in the last 6 months. This is just crazy to me. We saw a market fall precipitously to bear market territory and is now within 3 or 4% of all-time highs. That is a sign of complacency. Why is it complacent? Because people are just thinking, stocks fall, they just go right back up again. We need to suck those people back in. There are so many parallels that we have to major market downturns, especially like 2000. Because 2000 was driven by valuations. That downturn was driven by valuations. Now, back to the valuations. I cannot keep stressing this enough. Stock market to GDP, which Warren Buffett, the best investor of all time, has said is the most reliable metric, is overvalued by 109%. The 10-year cyclically adjusted PE ratio, which all it cares about is how much money are these S&P 500 companies making no matter where it's at, it's overvalued by 111%, even worse than the stock market to GDP ratio. It's crazy, guys. These are the things that do matter. And yet I see people focusing on the things that don't matter. Why? Well, because valuations, we've been fine without valuations for a long time. We love seeing our stocks go up. Valuations make us fearful of, wait, we could have 5 or 10 years that don't look good. That's scary. I want to ignore that. But for some reason, we embrace these short-term blips that don't even matter in the long run. So what am I doing here? Guys, I'm sticking to principle-driven investing. That involves 2 major things. 1, I personally buy low-cost ETFs like SPY, QQQ, and SCHD. Not all of them right now, but SCHD I buy every single month. Why? Because I want to dip my toe in the market and let the market take over for me. Now, when it comes to individual companies and buying individual stocks, I got a lot of them. I got like 25 or 30. And this is where I follow my principle-driven investing ideas. There are 5 tenets to principle-driven investing. I'm not going to go through them right now, but if you want to see what they are, they're really important no matter what you're investing in. Stocks, businesses, real estate, bonds, whatever it is. Click the link below. I will email you the PDF immediately. And trust me when I say, if you read these over and over and really embrace them, you absolutely 100%, I guarantee, will be a better investor. But when it comes to individual companies, my goal is to buy good companies at great prices. Usually that means they have to be overlooked companies. They have to be companies that people have shifted their viewpoint on. They're not sexy anymore. They've had a short-term issue. Is it all the time? No, it's hard to find these things because when that story is so negative, because the stock price has done this, the story is going to match that stock price. It is hard to go against that, but it'll happen. 3 of the companies I own today, people told me I would never be able to buy them at these prices, and it happened. This will always be the case. Now, if these warning signs feel like they're stacking up on purpose, you might be right. There's a bigger story here. One where the government may actually want a reset. They're purposely doing things in order to get a reset. So watch the next video on your screen to see what I'm talking about and how a purposeful, planned crash could actually change everything and might be in the books. Thank you for your time.